It's another day to plan to profit. Hello, everybody. My name is Joe Boss. I'll be your boss for the day. How is everybody doing? I see Leon. Nice to see ya. We got a lot of news this morning. Stuff that hasn't really changed our trade plans from over the weekend. But man, is it exciting stuff that we got going on here. Let's go ahead and hop on into the charts. So, right off the bat, you get the dollar stronger. The VIX is up. Not good. Not good to see the VIX up. But the indices right now are green on the day here in pre-market. And yesterday so far, the big tech equities are still leading the charge. You can see here's the dollar up and away right now. Oil. Oh my God, did we have some news on oil or what? Let me go ahead and real quick grab my notes. Went ahead and I wrote them out, put them into the chat here for us all to read. Yeah, Russia, Saudis, they reduced their oil production. So the Saudis already said that they were going to reduce their oil production voluntarily by 1 million barrels per day. And today they just extended that cut into August. So all throughout July, and then they'll make another decision on whether or not they want to continue the 1 million barrels per day cut. And one of the things that has pushed us so far just in the last few hours is that Russia also is cutting their exports. They're exporting 500,000 barrels per day less. So that's putting some strain on the oil supply. Now, I got a feeling that'll actually be good for the Canadians in the US markets, but also for oil prices as a whole. It means that the oil that typically would be relatively easy to catch right now, to get oil from oil producing countries, it's going to have to travel much further now. So it's not necessarily that the oil out there doesn't exist and that you wouldn't be able to get it affordably. It's just that the shipping is going to be insane here for oil over, I don't know, maybe going into the end of the year. Based off some outlooks that I've read, it looks like oil tankers are going to be making a lot of money over the rest of this year now. So, with the oil news out of the way, we got some news out of Europe with PMIs, and we can actually look at the results of that news here right in TradingView through the economic calendar. And why don't we pull up the euro dollar? Real quick. Euro dollar over here. And then let's hide these indicators right here. Wow, check that out. Catching a low, very low probability. Yeah, right around here, you probably would have been buying based off this indicator, because that's roughly where a lot of your lows show up. And then you'd probably have your threshold quite literally either right here or somewhere down here. Yeah, somewhere around here you would have your stop. If you had your stop too conservative on the day, you would have been ticked out. You would have been bottom ticked out. And it sucks to see that, but that's just what happens when you have very conservative stops, and you can clearly see how price can get quite volatile. So you have some extremes here, either some very small candles or some very large candles. So if you're going to protect yourself, it looks like, 30 pips actually looks quite reasonable for stops based off the size of these candles, at least on this particular day. So if we were just to look at 30, and then 30 pips from there, low probability space, roughly around here. Yeah, this would have done just fine with just some common sense risk management on the volatility side. Yeah. So, with the day trade analysis done with these tools, let's go ahead and check out how the PMIs came out. Italy PMIs came out lower. It's all manufacturing PMIs that have come out. Russia PMIs are falling. Let's see here. Anything else? A lot of New Zealand data from back over there. All right. German manufacturing, lower. The forecast, it actually surprised lower than anticipated, which isn't great. The French manufacturing PMI surprised, which is interesting. At least the French have something good going over there in their economy, which is the manufacturing. Can't say too much about all the riots going on, right? And hey, nice to see you in the chat, James. Nice to see you. Yeah, we'll go ahead and we'll check out Google for sure. Yeah, guys, go ahead and say hi to everybody. Let's see here. We got S&P Global. That's the. Oh, this is the global. That's UK manufacturing, right? Yeah, S&P Global. This is just the manufacturing PMI for the UK. So manufacturing PMI for the UK came in effectively as forecast. It came in lower, but better than forecast, which is good. And then, it's like most of the European country manufacturing numbers came out bad or worse than expected. And then the UK is doing all right. And then France is holding on to one good economic indicator. So the Eurozone got hit pretty hard today around this time right here, because this is where all that economic data came out. And we're getting a bit of relief, right? We're getting a bit of relief. And I'm slowly starting to change my bias here going into the rest of the month, because I need to be cautious, right? Because I'm looking at these, probabilities and these indicators for the rest of the month, into next month, into the weeks ahead, and these indicators are pretty gosh darn bullish. Like, if there's no definitive downward trend here to like the 107s, the low to mid 107s here on euro dollar, man, you gotta bail, gotta flip potentially. However, I'm still bearish euro, and a lot of the smartest traders that I know are also still pretty darn short the euro, although there are a few people who are just standout bulls, guys who think that the Eurozone is going to outperform, let's say, the United States. I'm calling you out, MUFG. MUFG is just, they release their quarterly outlook. It's like this 60-page thing. I'm still going through it. And I posted a link to it in the Plan the Profit Discord. So if you want to read some institutional outlooks, or at least figure out where to get these outlooks, you join the Plan the Profit Discord. You hop in under research and outlooks. There's a big channel that I post in, every day. There's new outlooks from New Zealand banks and Australian banks and Canadian banks and, UK banks and US banks and European banks, all sorts of institutions. I go ahead and I find their public free shareable stuff, not the things that they have behind paywalls. You can't share that stuff. But I just find the public links, the stuff that they have just front facing on their site, and I'm like, oh, cool. Here's some insanely fantastic research that's free. And the only thing that's stopping people from learning about it or reading it is just knowing that it exists. So there's a particular outlook from this MUFG group. The M stands for Mitsubishi, believe it or not, Mitsubishi. They are just they're so bullish on Europe. They're so freaking bullish on Europe. And then there's also Unicredit also. They did another excellent outlook that I recommend reading. And they're also bullish on Europe. They also think that, I believe Unicredit, right, is extremely bullish on Europe. I believe they're also European based. Yeah. Let's go ahead and check out the Google. Right. But before that, real quick, the ES, right? ES is not looking so hot, to be frank. There's still a lot of downwards potential. Most of your tops are pretty much capped right here. Like, unless you're going above the 4,500 level, unless you're going above 4,500, I have no reason to anticipate any higher prices today. Yeah, and I really don't have any reason to assume that we don't go past 4,500. I mean, things are still looking really good. And considering the US economic data that's coming up here later in the day is still expected to, while contract from the prior number, still be expansionary. US macro data is really holding up. And the divergence between the United States really strong data and the macro data from the rest of the G7 and the rest of the developed world is starting to become so big of a difference that I'm getting outlooks saying, hey, we might have to be long the S&P and long the dollar and long the NASDAQ. And then, I mean, oh my God, there's probably going to be some fantastic pairs trade setups between European equities and US equities. This is probably going to be an amazing time for people who have pairs trading strategies between Europe and the United States, or even the United States and Australia, or the United States and New Zealand. There's probably going to be some fantastic pairs trading going on for the latter half of this year. I'd really would love to read some research on, you could say, international pairs trading between equities. So now that we kind of have an expectation of what's going on with the ES, we're going to go one level lower. We're going to go ahead and check out this fancy weighted index that I made. And this is an index of Apple, Microsoft, Amazon. So these are all the big tech names. Yeah, looks like it doesn't want to really go any higher. Let's go ahead and check out Google. I gotta probably optimize. Yeah, looks like I still gotta optimize this indicator for intraday equities. But so far, damn. Yeah, I wonder where exactly it's pulling that data from. Looks like it's pulling the data from this prior trading day. Yeah. Guess it's not taking into account these pre and post market sessions. So there you go. Now I got a little thing on my to-do list for this indicator. But I do know that it'll work on the higher time frames. That's all good. So let's see here. Anything else? Anything else as far as equities go? Let's check out Apple. Apple pulling back a little bit, but Lord, look at that insane rally here. That is just wow. What an insane rally. Yeah, it looks like it's collecting data from here to here. Yeah. So here, let's go down one more hour. Looks like I'm missing some lines on this chart. Huh. That is too weird. Well, looks like I got a little bug on my to-do list I gotta fork out, huh? You know, you'd think after so many people have been using these indicators that someone would tell me, hey, you know, maybe there's something going on here on the 1 hour chart. You know, you'd think you'd get a bug report, but I don't know, maybe this is just an anomaly. But I got a little bit of work to do here, looks like. Okie doke. So let's continue going down. We got oil. Oh, right. Oil is over here. Let's go over here to a 2 hour. Oil has probably topped out for the day. Oh, James, you saying I need to go to what is it? This one? The Class A? Yeah, it's been pretty sideways these last few days, huh? Yeah, over what the last 4 sessions, it's only been up about 2%, which, yikes. It's been taking quite a pullback here. All of June, huh? Man, the Google Class A hasn't been holding up too well in June, huh? Look at that. Freaking Tesla. And then, of course, the brand new the new $3 trillion company, Apple. just just look at that. It's literally this low volatility straight line going up and then this big shoot up. Like that is insane. That is insane. The performance of this company. Holy crap. Just such low volatility. Oh my god. I'm not following Apple News, but is there something that happened in the last 24 hours that has spiked them so high up here that has caused them to become the $3 trillion company? Anyways, while someone hopefully helps tell me what's up with Apple. We'll go ahead and go through some FX charts for the day. Here's the Aussie. Aussie's been holding on to its strength for the day. It probably bottomed out. Oh my god, look at that. The damn the damn thing. Freaking catching that top. Ay, 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 ay. Hey, most of the time your top shows up around here, and then boom. There's your top for the day. Alright, New Zealand dollar. Let's check out what's up with New Zealand. There's still room for downside. It hit the likely top for the day. Yeah, I hit the likely top for the day. I wouldn't expect more upside. But from the outlooks that I've read on New Zealand, most of the banks in New Zealand are especially bearish. One of the reasons is because dairy is, I think on Wednesday, if I'm correct, there's some more pricing, some more supply for dairy coming out. The pricing for the dairy commodity, which is New Zealand's largest export, has just been total crap. When China has been continuously slowing down on their economic growth, one of the things that they've been pulling back on is dairy purchases. And they buy a lot of dairy. The Chinese buy a lot of dairy from New Zealand. And so as China's slowed down, they've purchased less dairy, which has caused there to be less demand for New Zealand dollars, which means there's now more New Zealand dollars just floating around internally within New Zealand. The currency would strengthen if China had to buy New Zealand and they did the FX swap, right? And don't get me wrong, there's still transactions going on, there's still volume occurring, but on a relative basis, it's just, compared to the growth we're seeing in the United States, it's not as good. Oh, Apple has hopped into AI. Damn. Well. Oh, man. Yep. Just say your company's into AI. Although, if it's Apple saying it, you know that they probably got something special. From what I understand, they have specialized chips, AI accelerator chips. So just effectively ASICs for the type of computing done on AI programs. That's it. Let's go ahead, keep going down. Here's the pound, right? The good old pound. Pound got hammered here. I'm surprised it didn't come down lower here to call it the 126.3s, somewhere between 126.4 and 126.3. Surprised we haven't fallen into this area. But there's still time left in the day. It's just usually you probably hit it at this point in time. Who knows? Maybe if the US data later today comes out fine, we'll hit those prices, right? Never say never. You know, the old Justin Bieber thing. Let's see here. Aussie yen. If there's any consensus right now in the FX space, it's to still be short yen. The consensus in FX markets around just being short yen is effectively 100%. Don't get me wrong. A lot of the outlooks and a lot of these institutions that I talk about in these outlooks, they've all flagged a risk, saying, hey, they're at the BOJ in their latest speech, they talk about how are they going to approach yield curve control. And based off the way that the Bank of Japan is talking about yield curve control, it doesn't seem like they're actually going to do anything here in July. And even in their next meeting, I believe in September, no, they're probably not going to do anything either. It sounds nuts, but the Bank of Japan may just continue on its policy, even with the yen potentially above 145. Like, there are analysts saying, hey, you gotta almost be prepared for, above 147, between 147 and 150. There could be some significant devaluation going forward. But until we actually get there, and unless the Bank of Japan or the Ministry of Finance in Japan actually have to intervene, it doesn't seem like anyone is really changing their mind. However, everybody sure as hell does have their guard up as to whether or not, no one's trying to predict when exactly the BOJ is going to do it, just a general window of time based off the most recent speeches and data. So you can only ever get a time frame estimate. You're never going to say, like, okay, on this exact day, they're going to flip or whatever. There's just so much uncertainty because the BOJ doesn't even know exactly what they want to do. There's dissent within the BOJ. So some people in the BOJ want to focus on letting inflation continuing to go because they're getting very good growth right now. Right? Warren Buffett's been putting billions of dollars into Japan, and then there's been this huge flow of money following Buffett into Japan still today, right? And if you just want to see what that's looked like, you can check it out right here on the Nikkei. Oh my god, it's at a new high again on this day. Oh man. Look at that. It's probably going to make another high tomorrow or in a day or two. Yeah, sometime over the next week. By the end of this week, you could be above 34K and make another new all-time high for the equity market in Japan. If only that were true also for the Chinese stock market, right? The Chinese stock market's not doing so hot. Speaking of China, this is insane weakness of the Chinese currency. The Chinese currency just keeps on weakening, and look how this is the same level of weakness over time as you got over here back in 22. Guys, such a weak yuan really hurts Xi's ambitions of turning China into a consumer economy. China needs a strong yuan in order to facilitate that transition from, just producing mass exporting stuff to having Chinese consumer buying power. And it doesn't seem like they're getting it. And the volatility over, especially like the last few years, just like down and up and down and up and down and up. The amount of volatility in the exchange rate here is also making it harder for businesses within China to be able to competently do their business with foreigners. Because now, with this extra volatility in the moves of the yuan, there's all this foreign exchange risk. And, you know, if over the span of 3 or 4 days or a week or 2 weeks, you know, sometimes it could take a week or two to get your stuff from China that you ordered. So if you're a business and you order stuff from China, it takes a week to get here, and then you got to pay once it gets to the port on settlement. Well, how would you like, after, you know, waiting a week, that suddenly you have to pay close to 2 to 3% more for the currency conversion? Like that. Sometimes if your margin is 20% on the products you sell, and you don't account for this currency move, that's going to eat into your 20% profit margin. And who are you now going to be taking that profit away from? Right? Probably you, or, you know, most likely yourself, right? It's just, you're not going to let somebody eat that mistake, and if you do, you're probably not a very shrewd businessman if you push that cost onto somebody else other than yourself, because missing out on those currency moves, or miscalculating those currency moves, or having that sort of exposure, that sort of risk to currency moves, is the risk you take on when you have a business, and it is mitigable. You can have currency positions on while you wait for your transactions to settle, to hedge out those differences, so you don't have to pay that extra currency conversion tax, especially if you're talking, you know, large export orders or import orders. And, you know, there's people's jobs where all they do is focus on that, doing currency risk for import-export operations, and for large retailers who have to import-export stuff out of China and India and, you know, all these countries, you know, like Australia. You know, there's commodities traders that have to do currency risk at their FX desks in New Zealand for all the dairy that they import and export. Yeah, I read that, James, that Goldman Sachs wants out of their contract with Apple. Yeah, man, I wonder why they want to do that. You know, it seems like they'd have. It seems like it's probably not about the money, because they're probably making a lot of money. Maybe it's the relationship. Okie doke. Let's see here. Dollar CAD. So look at that. On the news from OPEC, specifically the Saudis and the Russians cutting their oil supply, look at the reaction out of the Canadian dollar FX market. Here is when the news got released, right around here at 2 a.m. my time, and it drops. So this is, it's only a 16 pip move. You know, you would anticipate that if markets were anticipating this to be a more significant restriction of oil supply, that it would have a more significant impact. So this chart would be down a bit more. But one of the things that this tells me is, let's go back to this oil chart. Oil's got to move, man. Oil's got to move off this. Look, if oil doesn't move off of this, what this could signal is that there's desperation within the oil market of people who still have oil surplus. And that oil demand globally has slowed down more significantly than what is estimated. So if this news of oil supply getting tightened out of Russia and Saudi Arabia doesn't push us up like another buck from here, get us into the 72s, like back into this price range, roughly around here. We're just in the bottom of this area. Like it's got to move us a bit higher, hopefully get us into the 72s. But if it doesn't actually, for example, kick us out of this lower downtrend, if it doesn't kick us out of this lower downtrend, it means that the demand for oil is being overestimated. If the price for oil here doesn't establish a new upwards or sideways trend at this point, the demand for oil could be overestimated. And one of the reasons why that could be true is simply due to all of the forecasts for developed countries and how growth for developed countries, GDP, is anticipated to fall over the rest of this quarter and into 2024. Ever since 2020, GDP has been falling significantly because we've had all these stimulatory base effects. We're finally going through the final bit of COVID stimulatory base effects now, it seems. And in 2024, the base effects from COVID stimulus will have finally been reined in. At least that's the baseline expectation, it seems. Yeah. So, one thing we can do real quick. 1, 2, 3. Yeah, we can linear regress the last 3 days. So if we assume, actually, that's just the last 2 days there. Well, we can still include this day down here if we want. So linear regress like that. Oh, wow, that follows that linear regression for today really, really well. And that's an actual forecast. So the sampling is from this day, and this day, and then forecasting it out into this day. So yeah, it looks like, if I didn't hide that, it looks like this linear regress forecast is holding up real well. And we got some positive news that is establishing this neat little positive trend here. So if we continue to follow this trend outside of this larger one that's been established effectively since the beginning of May, so this is all like most of May, most of June, we can use more data here out of June now that we have it. We can go right up until, boom, right there. There you go. So this is partially beginning of May all the way up to the end of June. So what we're looking for is for this thing just to either maintain this linear trend higher up into the $72 range, hold it, go up and spike up higher to 73 because you have some other country saying, oh, we're also going to cut oil supply. Or this is a very shortable opportunity. Yeah. I mean, you come up here very infrequently, at least on the day. Let's see here. Where do most of our closes? So 84, you could say 84.94, call it 85% of the time. The close for the day is below this price here of 71.63. Yeah. Yeah. I don't think we're going to end the day significantly higher. But man, you cross that 71.8 level and you open the door to a lot of volatile fighting around the $72 psych level. Let's go ahead and check out Bitcoin real quick. It's not looking like a fantastic day on little Bitcoin. Looks like most of the time we're going to be ending the day here between 30.6K and 30.5K, roughly in this $200 zone. Call it 30.7K because that's 30.68. Oh, man. Well, let's try loading up more historical data. See if we can get this little graphical problem fixed. Nah. Alrighty. So it looks like we're going sideways now. We can probably reuse this trend here. Yeah, this seems pretty likely that the next move here on Bitcoin's going to be something like that. We'll probably get some kind of volatile wick down here to 30.4, somewhere between 30.4 30.5 for today on Bitcoin, somewhere in that $100 range. Somewhere around here. Check out little ETH. Ethereum's been popping here, huh? Yeah, quite a reversal. Well, hit the likely top for the day. Yeah. Yeah, you gotta be real careful once you start trading in here. It's kind of, yeah, you're getting up to a psych level. You're getting into these small odds up here around 2K. Yeah, this is definitely a spot to be careful in because there's risks of seeing some upside jumps here, it looks like. Litecoin seeing a little bit of a pullback. It's had this insane rally, apparently, from EDX buying a lot of Litecoin. And they also supposedly bought a lot of Bitcoin Cash as well. BCH. Yeah, see, same time around here, but about a week earlier. Yeah, check that out. Hit a likely high for the day and is right here before you start thresholding into your tail risk stuff. Yeah, you start moving below this 289 level and you're dealing with falling knife situations here on the day. So it's definitely a spot to be careful in. Yep, RBA is doing some stuff. there's an 84% probability that the RBA just does nothing. And real quick, looks like my notes are frozen here. I'm going to go to Aussie dollar real quick and pull up this. So this 84% here is your probability of the RBA giving a rate hike. And this is, actually, no, it's this. This is them doing nothing. No change. And the 16% is an increase, to 4.35%. Yeah, you can actually see how it changes over time, how that probability changed over time here. So you had pretty high odds back here in the middle of June, and it's just been falling. Less and less and less likely that they hike, and right now it's where we're about right here. And it looks like a week ago, just frankly at the last pip right here on June 30th, it was like 32%, a third of traders thought that there was going to be a hike, and now it's way down here. It's like a sixth. Yeah, pretty nuts for the RBA. Oh. Yeah, I got a bit of a bearish bias here on the day on Bitcoin. And I think you can clearly see why. Yeah. That looks pretty clean. And also this linear regress seems to be just fine here. You can kind of see how we've been trading in this for now, and we're just extending this forward. So, yeah, this makes sense. That makes sense to me. Let's check out gold. Gold. Well, looks like I didn't quite catch that expectation, right? I was saying, hey, gold's probably going to go a bit higher. We came within 0.1%, within, what, $2 of where I anticipated the high for the day to come in. So, sorry, I was $2 off on a close to $2,000 asset. And as far as where the low is today, yeah, 50-50 chance that your low is in right now on gold for the day, roughly 50-50. So there's still quite a bit of risk. I think instead of looking at where the top or the low for today is probably going to come in on gold, that we check out where we're likely to close. And here you can see this is actually a lot more useful for us right now as traders for the rest of the day. You can actually see right here, this is saying, hey, what, 80, this is something like 84% of the time. Yeah. 84% of the time you will end the day, based off all the data we've collected for this distribution here, somewhere above 1918. So if I was trading gold, I'd be a buyer right now, and I'd be taking it into the end of day, into the high 1920s. Of all the trades that we've looked at so far today, this is probably the most actionable. This looks like the cleanest for a trade to hold into end of day. based off what I'm interpreting from these indicators. And real quick, we could do some risk analysis, right? So if you buy here based off the probabilities, right? Again, not financial advice, all that stuff. We're interpreting probabilities. And as you go interpreting probabilities, any outcome can legitimately occur in that range of probabilities. We could go sideways for all we know. I'm simply looking at where most of the probabilities are, and that is the nominal trade plan I'm making. So wherever most of the probabilities lie is what I'm interpreting, right? It's not me telling you specifically what to do. It's me interpreting, based on this indicator and these probabilities, this seems like the most likely and nominal outcome based off the statistics here. And as far as risk management goes, you can see how we go from this lighter color here to this darker color. So this is where you can clearly tell, your tail risk is clearly down here. So once you go past, call it 1908, you're starting to deal with very unlikely probabilities. This is all falling knife stuff that you probably wouldn't want to get caught up in. So that seems like a reasonable spot to put a threshold level at, where you probably wouldn't want to be long. So let's call that the bearish threshold, where once you cross below it, you're now dealing with very low probability events that are relatively unpredictable and have a high degree of uncertainty. Because, look at this. You're taking a very small amount of your probabilities and spreading it over a very, very, very wide price range. It just, that's the threshold before you go into falling knife land. So yeah, I like this setup going into the end of day on gold. That looks quite nice. Is there anything else you guys wanted me to take a look at? Because I've had a pretty good time looking at all these charts so far for today, looking at all these trade plans for the day ahead. It all looks pretty straightforward right now as far as what to do on the trading side of things. A pretty simple Monday, right? Because in equities markets, at least in the US and most US markets, it's a half day. I don't know about the rest of the world, but it's a half day here in the US. And then tomorrow is a holiday. It's the 4th of July. So US markets are completely closed tomorrow. There will be very little volume today and very little volume tomorrow. So we're probably not going to see a whole lot of movement unless there's some very, very important news. Let's see. We have an ECB speech that came out. Monetary policy, quote, ECB's Nagel. Monetary policy signals are clearly pointing in the direction of further tightening. Yeah, that's extraordinarily straightforward. Yeah. And also that's the consensus expectation, at least for the ECB. ECB is absolutely expected to hike based off pretty much every single outlook. It's just a matter of, are people anticipating that they'll do 1, 2, or 3 hikes? That's where the debate is. And that's going to depend on how the macro data comes out. And I don't think it's going to get so bad that they won't be able to do like less than 2 hikes. They should be able to do, 2 or 3 more hikes potentially out of the ECB. But who knows? Anything can happen over the next, 2 or 3 months if the economies around the world slow down enough. But who's to say that they will? Canada is off today. Yeah. We can actually... Yeah, you can see that the Canadian stock market is not doing jack. The next trading day available for Canada is the 4th of July, actually. We had Canada Day on Saturday. Oh, right. Right. It was. It certainly was Canada Day. I can't. I was just talking with somebody about it earlier today. I can't believe I forgot to mention that. Pound New Zealand. Anything for you, James? Anything for you? Okay, doke. There's a bit of a longer term setup here that we can linear regress. Here to the beginning of June. So this is the trend of June being projected out here into the future for July. Let's go. Man, look at that call. Up, down, up. Jeez. What a freaking call, man. Okie doke. Man, it's just been down, down, down. The last 3 or so trading days, huh? Wow, looks like the low is in on the day here. Anyone buying here probably was freaking out a little bit right around here, but they're probably a bit relieved over the last 3 or 4 hours. Yeah, check that out. When you go down to a lower time frame, so either your low comes in here usually for the day or somewhere around here. So pretty sure all the traders who were getting in right here were getting a little concerned right about here and either thinking about adding here and stopping out down here. And those guys were just now relieved that we've popped up. The low is probably in for the day, unless they're getting another fall, right? Looks like the top is in, though, for the day, too. This is likely another pair where looking at the closing data could come in handy. So it looks like you could end up closing the day sideways. A lot of the time you end up closing around this area here between 2.066 and 2.061. So quite a range here, around 50 pip range where most of the time you end the trading day. I'd say once you get to around 2.067 and you start trading above there, it you'll probably end the day flat based off these odds. Or if you're bullish, cross your fingers, hope that you go up here. But I think that the downside for this day is pretty much clocked in. Most likely, based off what I'm seeing here, the low for the day is probably clocked in about now. Let's see. yeah, not a whole lot else going on. I think I've pretty much covered everything I wanted to cover, at least for today. There's definitely going to be a lot of stuff going on tomorrow. Well, no, tomorrow's 4th of July. See, while this is a half week and while it's pretty calm and relaxed today and tomorrow, the end of this week is going to get pretty darn hectic. Thursday, Friday, specifically, we have a lot of particularly nutty things coming out. You have the ECB meeting, you have composite PMIs. Like, the end of this week has some significant potential to set directional moves. So right now, today and tomorrow is the day to prepare, right? Catch up on reading outlooks, catch up on the economic calendar, catch up on the consensus, and then figure out the risk management, your own risk management trade plan for the rest of this week for those major economic events coming at the end of this week. Because right now everyone's nice and relaxed because, it's the holiday, man. But come the end of this week, think we're gonna be hitting the ground running pretty darn fast, right? Nice to see you, Shell. Nice to see you. Seasonality shows short. Well, short was definitely the right answer, right? Right off the bat, short was definitely the right answer, at least for today, here on Pound New Zealand. But I'm just saying that the low might be in for the day, right? Based off these odds here. Now, for everyone else who's watching, it's nice to say hi. Go ahead and drop a money bag in the chat. Good. Leave a money bag for everybody else. And I think now is a good time for me to go ahead and call it here for the stream. Thank you guys for watching me do these trade plans here for Plan to Profit. This was the daily plan. Tomorrow we're going to have another daily plan for 4th of July, believe it or not. And we're going to be preparing at the next few daily plans for the hectic Thursday and Friday ahead. So remember to hop into the Plan to Profit Discord. Come review some of those outlooks that I talk about. Hit me up if you need a little bit of guidance as to what to read, what to look for, maybe some interesting things to research. And I'll see you guys in a bit. I'll be hanging out in the Discord, by the way. So if you want to hang out, I'll be in there.